Coinbase reported their earnings this week, and it went to the moon, as we forecasted. Our forecast was very accurate, not 100%, but still we think the best out there. Other analysts predicted a revenue that was similar to Q3. To be fair, Coinbase did guide similar numbers, but we predicted a 35% increase in revenue, and they reported a 41% increase in revenue. We think we're pretty close, but we can always do better. But if you used our information and our analysis, you could have made a hefty profit betting the Coinbase stock would go up after they report. In this video, we will review the forecast and how close our numbers were to the actuals, as well as provide a Q1 forecast, actually a Q1 forecast, which we will update in April to an official final forecast for Q1. We'll also cover why so many analysts and investors were short-sighted and bet that Coinbase stock would go down and that the revenue would be less than what we predicted. Welcome to Delta Code, where I simplify stock and crypto investing. I am Delta, an economist with 20 years of investment experience, and I will be a guide through the labyrinth of ledgers, enigma of economies, and volatile earning reports, just like the one we saw from Coinbase this week. Here at Delta Code, I break down jargon, analyze trends, and provide actionable insights so you can make smart investment decisions. If you followed my Q4 Coinbase earnings forecast, you could have made a hefty profit. A Delta Code, we're not just watching the markets, we're cracking the investment code and unlocking its secrets. Coinbase just reported their earnings, and let's see how accurate my forecast was. If you haven't seen my Coinbase preview for Q4, check that out so you can be confident in my future forecasts. So I do a whole analysis of previous quarters, and about here I look at a technical analysis chart and my forecast that if my numbers are accurate, what would happen to the price of Coinbase. And both Q4 is better than expected and guidance for Q1 is higher than analysts expect. We can expect it to go back to where it was here, possibly breach 200 in the near term. I will also make a video of how I used my forecast to make 1400% return on Coinbase options the week of the earnings. Let us now look at my forecast for Q4 2023 and how it differed from the actual earnings report that Coinbase just delivered last week, and why I was so accurate and why the stock went up. All right, so I forecasted a revenue of $917 million. This would be a 35% change from the previous quarter and a 243 million change quarter over quarter. I got the receipts. Now let us look at the actual earnings report that Coinbase delivered last week and compare that to our forecast. All right, so I forecasted transaction-based revenue of 506 and subscriptions of 360 with total revenue of 917. The actual was 529, 375, and 954. So my revenue was off by 4% or $37 million. I predicted 35% increase. It was a 41% increase quarter over quarter. Overall, I'm pretty happy with my forecast. The operating expenses could have been a little better. I forecasted 784 million and the actual was 838. Something that was hard to account for after the operating profit is the taxes and other income, as well as the interest of 19 million. Now, this is going to be a reoccurring quarterly expense, so we will keep it in the future income statements and our forecasts. Now, the tax benefit, that is based on them having losses in previous quarters, so they use that benefit to break it against the profit. And other income, it's also hard to forecast because it comes from sales of assets. Overall, they had a net income of $273 million and earnings per share of $1.04, vastly beating the analysts' expectations. Quarter over quarter, delta is 41% and $280 million delta on the revenue. Our forecast was 4% off and short $37 million of the actual, but far exceeding other analysts. The impact to the forecast that we published previously is very minimal. Let's now cover the forecast for Q1 of 2024. Remember again, this is a forecast. This is less accurate than our forecast. We will make the forecast into a forecast in April. But as of now, given the trend that I'm seeing, this is what I expect. The latest earnings report has not made a significant impact to my forecast, but I will update you if that changes with the incoming data. I expect $680 million in transaction-based revenue, institutions to tick up, stablecoins to remain about the same, blockchain rewards to be up about 20%. Custodial fees are the biggest delta in the upcoming quarter because they are now a custodian for 8 out of the 11 ETFs, and we expect a significant increase in this revenue line item. We will know exactly what this looks like after they report. For now, we are upping this by about 200% from the previous quarter. Other subs and other interest income, we upped a bit as well. Expenses have been pretty accurate to their guidance, so we are taking them at their word and updating the numbers as they have guided. We are leaving the interest expense at $20 million. This is a reoccurring expense they'll have. And the unknown is how they will treat the tax, if there will be a benefit or they actually pay taxes on this quarter, and other income. Their net income could be between $200 and $500 million next quarter, given how the taxes are treated. With this forecast, we are expecting a 25% change in revenue quarter over quarter, which is a $237 million delta. This will bring the total revenue between $1.1 billion to $1.25 billion. This is a 5% plus or minus from our $1.190 billion number. Now, this was in the earnings report, a cool little graphic that shows the net income of $95 million for 2023, total revenue of $3.1 billion, and adjusted EBITDA of $964 million. Their resources in USD have gone up $217 million to $5.7 billion, and they have reduced their debt by 12% year over year. Net income in Q4 was $273 million, total revenue $954 million, and adjusted EBITDA 69% quarter over quarter to $305 million. Now, 1 out of 3 top 100 hedge funds by assets under management are on Coinbase as of Q4 2023. This is huge. Fun fact, 80% plus of crypto trading happens outside of the United States. This is why Coinbase has continued their international expansion. They've onboarded over 100 institutions to their international exchange. They've expanded their footprint to UK, Brazil, Canada, France, Spain. Coinbase's L2 on Ethereum, named Base, is one of the fastest, largest growing ecosystems that's been launched since 2020. Now, if you think that this graphic is cool, Brian Armstrong, the CEO of Coinbase, posted this on Twitter. that now you can mint an NFT of the earnings. If you click on this link, I will post it in the description below. You will go to nft.coinbase.com, mint coin earnings, and you can mint this NFT. It costs about 25 cents to mint it on Base. Why would you want to do this? This could possibly result in an airdrop if Coinbase ever launches a token of the Base chain, which this kind of hints that they might do in the future. One way to screen out who to give the airdrop to is by having this soul-bound token proving that you're not a bot. Next, fun fact. This was in the 10K report. Coinbase bought the dip. They bought $330 million of crypto, $126 million of Bitcoin, $130 million of Ethereum, $6 million of Solana, and 68 of other assets. Because of the change in accounting practices, where now you can actually report the fair value, not the lowest value that it's ever been, Coinbase now has about $1 billion of their investments on their books that they can now report correctly, not impaired. This is about $700 million, which results into about $3.25 of earnings per share on their investments that I feel like Wall Street is totally missing. This is what happened with Coinbase. It went as high as 192 following the earnings report, and it's now trading at about 180 for the long weekend, where people may be slightly risk off. Next earnings report is in May, between 2nd and the 6th. This is where our forecasts for Q1 will come in useful if you plan to trade or invest in Coinbase, so stay tuned. Don't forget to subscribe. Let's take a look at the math for our Q4 and Q1 forecast and forecast. So these are the actual changes from Q3 to Q4. Here is our forecast for Q1, expecting $1.19 billion, which is a 25% improvement. The biggest bump we are expecting is custodial fees to go from $20 million to 60. This is a $40 million difference, or 200%. We expect institutional revenue to bump up as institutions are getting more interested in crypto. Stablecoins to remain pretty much the same. Blockchain rewards to go up as there has been an increase in Ethereum price. Ethereum is now almost 2,900. So from the previous quarter, adjusting for that in absolutes to percentages, we expect about a 25% bump in their blockchain reward revenue. We predicted $100 million for Q4. They reported 95, so we were 5 off there. Other subs, we also expect to be bumped up as they saw a 43% bump in the last quarter. We are dialing that down to 30% increase for the next quarter, which is about 14 million, similar to what they had last quarter, but in percentage terms, it is a lower percentage. What is going to happen in 2024 for Coinbase? As we can see in this chart of trading volume peaked in 2021, late 2021, and it hasn't hit these levels since. This is about 300 billion daily volume. It is now about $100 billion. But you can see this was the low here in 2023, and now it's going up. This is a positive trend. If this continues to look something like this, 300 billion, then we can expect their transaction-based revenue to also 3x. Remember, this is not 100% of their revenue. They have services and subscriptions that are about 50% of the revenue. Also, the entire market capitalization of crypto is not back to its all-time high. It peaked at about $3 trillion, and now it's hovering around about 2. Bitcoin itself is now worth $1 trillion, which is 50% of the market. These are the annual revenue estimates that analysts have for 2024 and 2025. I don't see a big problem with this, other than it doesn't really capture the full possibility of what will happen if Bitcoin goes to $100,000 plus and Ethereum goes to 10,000 plus. This will be a huge impact on transaction-based revenue and blockchain rewards. That I feel like these numbers are quite grounded and realistic, but if institutions are really coming in hot and onboarding massive amounts of capital into the market, then I expect these numbers to be much bigger. Let's just look at the Bitcoin holdings by spot ETFs. We got Grayscale with the most because they've been already in the game for years and just converted their trust into a spot ETF. These institutions are vacuuming up Bitcoin. And next, they will do the same to Ethereum. Except Ethereum is a smaller market cap, so this much capital chasing that asset will have a bigger impact. Let's take a look at Coinbase's income journey since 2020. In Q3 of 2020, Coinbase had a small profit of a few $100 million that gradually went up, and in Q1 of 2021 they reported $1.1 billion profit. Next quarter, in Q2 of 2021, they reported $1.6 billion profit on $2 billion of revenue. Then the profit went down as their expenses actually also increased. Revenue went down to 1.2 and their profit went down to $400 million. In Q4 2021, this was the last quarter for a long time when they reported a profit of almost $1 billion on $3 billion of revenue and $2 billion of expenses. Starting then, in Q1 of 2022, Coinbase started losing money. About $1 billion in Q1, little bit more in Q2, 1.6, and then they started laying people off, controlling their expenses, and steadily decreasing the loss, where in 2023 they got it really under control. You can see the red became very small. Their revenue also stabilized at about $1 million. And then as we forecasted, Q4 2023 was going to be the first profitable quarter in a while, and we were right. And going forward, Q1 is also likely to be profitable. If they can do this again, have 4 profitable quarters in a row, then they would be a candidate to be included in the S&P 500. As a leader in their industry, I couldn't imagine them not being added. Let's take a look what happened with Coinbase after the ETF. So here's the run-up through December, excitement about ETF and that Coinbase will be the custodian. Coinbase stock went up as high as 186. And then this was the top in late December. And expectation of the ETF was January 10th. That was the last date, and it got approved. Since Coinbase was the custodian for 8 out of 11, you would think this would be good for the price of the stock. But it went down from 150 at the time of approval to low as 120 and local low of 117 just a week ago. Some analysts believe that the ETF would take away from Coinbase revenue, mostly transaction revenue, because customers would prefer to use the ETF over trading on Coinbase. Now, this is where they made a huge mistake. If we look at the Q4 shareholders letter, we can see that transactions revenue, Bitcoin is only 29% of transaction revenue, which means Ethereum 13 and altcoins 57 are vast majority of their transaction revenue. So even if they were right that ETF would take away from their transaction revenue, which let's say maybe you could argue that's why it went from 37 to 29, these other altcoins are even a higher percentage, and consumers pay a higher fee than institutions to trade on Coinbase platform. After the ETF news, the price dipped, contrary to what you would expect. Why? Because traditional investors and analysts mistakenly thought that ETF would cannibalize transactions revenue. They were very wrong. Coinbase customer base, they are early adopters and not your typical boomers who are trying to buy an ETF for their 401k. They want to own their crypto. They want to hold it directly, transfer it to their private wallets. And on top of that, 70% of their transaction revenue is non-Bitcoin revenue. So even if the ETF cannibalized the Bitcoin revenue, transaction revenue slightly, it's not as big of an impact as you would think. Think about this. Almost every major financial institution now has an ETF for Bitcoin and is incentivized to sell that product because they earn fees on it. Now, portfolio managers or asset managers have to be oblivious not to look at the returns of Bitcoin compared to traditional assets like stocks and real estate and commodities. Bitcoin and other top cryptos have been the best performing assets in the last 10 years. A portfolio that has a mix of traditional assets and new crypto assets would have outperformed other portfolios. Continuity error once again. Say hi. Once the money managers that have crypto exposure in their portfolio show performance that is better than their counterparts that are refusing to dip their toes in the crypto assets, their performance will stand out night and day. And in this industry, performance is king. You are judged based on your performance, and if you perform, more money comes to you. It's a meritocracy if there ever was one. Either you make money or you don't. Managers that make money, thanks to having exposure to crypto, an uncorrelated asset that outperforms all other assets, will see an increase in assets under management come to them. Their competitors will be forced to get in the game sooner or later or just lose out. This positive feedback loop will create even more of a frenzy, and there is a lot of institutional money on the sidelines. Once they all start flowing in, this asset class will go bananas. Once I publish my final forecast for Q1 of 2024, that will be the time for you to keep your eyes open for a mispricing in the market and an opportunity to profit from analysts being wrong yet again. Also, if crypto prices keep going up like bananas, what do you think will happen? Will people trade more crypto? Will it be mentioned more in the media? Will people FOMO more in? Will friends that don't own any coins start calling you, asking you for advice which shitcoin to buy? All of these things will be a flywheel for Coinbase revenue as volatility creates more transaction revenue. Additionally, all these large institutions are onboarding clients and putting in massive funds into the ETFs. This will be revenue for Coinbase, either from transaction fees or from custodial fees and other services. My next video, I will share with you how I made 1,400% return in 1 week using my Coinbase Q4 2023 forecast, the one you see right here and that I published before. I invested a very small amount, close to $600, and in 1 week, I made that into over $8,000. I will make a video how I did this and how you can use the insights to make a profit. Remember to subscribe and hit the notification bell and become a member of the Delta Code crew, where curiosity meets clarity and change is the only constant. And as always, may the force of compound interest be with you. Peace.